Yash Bajaj is a funding partner and fund manager at Hachiman Capital. His fund has been an outperformer, beating the benchmark for 2009 and year-to-date performance, of course. Yash joins us from Tokyo this morning. Yash, why should we be buying into the Japan story? Still so much uncertainty out there. Deflation concerns, aging population, lack of growth drivers. I mean, despite the better-than-expected GDP numbers yesterday.
Yes, yes, Haslinda. Thank you for having me on the show. The demographics are clearly still quite negative on a long-term basis in Japan. But there are some reasons why this particular year we feel confident in the market and valuations at the current level. We think our basic premise is that G7 mature economy growth is going to surprise on the upside this year. And Japan is the counter that is the most geared and correlated to that growth. In particular, Japanese manufacturing companies, which, by the way, have a long track record of dealing with external shocks, are the most geared and most profitable way of playing this rebound in those mature economies. Now, we're not saying that emerging markets won't continue to show decent economic and profit growth, but that largely, in our view, is a consensus trade, and valuations tell us that a reasonable amount of that is now valued in the share prices.
Yash, how about other risks? I mean, take a look at Greece. Is Japan immune to the risks coming out of Greece?
Well, not at all, no. But what we would say is, as I said earlier, that the ability of Japanese companies to deal with external shocks is a long history of that, starting from when I really started in the market in the mid-'80s, when we had severe currency shocks, to what we've really seen more recently, post-Lehman shock, in terms of the ability of Japanese companies to restructure, means that on a bottom-up basis, we feel quite confident that they can deal with this better than most companies globally. Now, the simple answer to your question is it's not immune, no. So external shocks, particularly through the flow of foreign funds in the Japanese market, would be an issue if the externals deteriorated dramatically.
How about the yen? Up 5% this year alone, impacting the exporters in Japan?
Yeah, most Japanese companies are set to be profitable, and through Keidanren guidance, around about 90 to 95 yen to the dollar. I think particularly with what we've seen in terms of their cost cutting over the last 18 months, that number is probably nearer 80 to 85 right now. So we don't think that would be a significant effect. More interestingly, Asian currency crosses like the yen-won actually going in the direction of the Japanese this year.
Okay, let's take a look at your investment strategy. I was reading your the notes on that. You are bullish on financials, especially brokers and investment banks. Why is that?
Well, we believe that they're at a cyclical low in terms of their earnings, and we believe that the structural changes in the two leading investment banks in Japan mean that their return on equity levels are probably likely to exceed their long-term levels, which by global standards have been, quite honestly, pedestrian. So we think the earnings power and the cyclicality of these companies is going to deliver very strong returns. We also think they're good front-end stocks for what we believe would be a sustained earnings and economic recovery in Japan for the next 12 to 18 months.
Quantify that earnings power. Are you looking at double-digit growth going forward?
We're looking at significant double-digit growth, but more importantly, we're looking at ROE well in excess of previous levels, so double-digit ROE, whereas we're looking at 3 to 5% for both the listed large investment banks in Japan historically.
Bearish on basic materials?
Well, in a Japanese context, most of the Japanese companies are midstream processors and have little pricing power or market share. As a result, they're price takers generally. As such, at this point in the economic cycle, we see the earnings momentum at best peaking out, and at worst in some particular commodity areas, profitability deteriorating very dramatically.
Okay, Yash Bajaj, funding partner and fund manager at Hachiman Capital. Thank you so much for that.